Hi, my name is Lynnette Abad, and you are watching an episode of Property Finder Talks, where I speak to leaders in the real estate industry here in the UAE. Today's episode is very exciting. It is the first panel edition of Property Finder Talks. So, ladies first, we're here joined today by Dunya Fadi, Chief Operating Officer of Berkshire Hathaway Home Services, Richard Wayne, Managing Director of Better Homes,
Thanks for that.
Abdullah Al-Jaji, Founder of Driven Properties, Aaron Lomax, Managing Partner of Treo Homes. Thank you all for joining us here today.
Thank you.
Pleasure.
So I'm very excited about this edition of Property Finder Talks because, as I said, it's the first panel edition. And I'm very happy to be joined here by some of the top leading real estate professionals here in the UAE. So let's just start with the general question that everybody asks. How is the real estate market? So I'll start with Dunya. You came into Berkshire Hathaway probably around July.
Yes.
So you've had a very short amount of time. However, I can only imagine the growth has been well. So talk a little bit about that.
Yeah, so the company has been around now for 6 months in Dubai, and from the time I joined in July 1st, we have seen a springboard effect of the brand within the region. It was well received. A lot of people looked at it as a vote of confidence for the region, for the Middle East and UAE in particular. And yes, we are right now growing month on month in terms of staff, in terms of revenue, sales, and we have very good plans for the future as well that we're currently working on. So yeah, it has been very positive overall.
That's very good. Abdullah, I'll ask you. You've expanded recently into Saudi, into Riyadh, and you also have an operation in China. Talk to us a little bit about that.
Yeah, well, we've taken a conscious decision early 2018 to target new markets and international expansion, and that's purely to diversify our sources of revenue. And it's each operation has a different model. In China, our model is particularly to bring in Chinese investors to invest in Dubai. In Saudi, while a small part of it is bringing Saudi investors into Dubai, the greatest majority or the main kind of model there is to target capital markets, banks, REITs, real estate investment trusts and funds, where we can manage properties on their behalf, because that's a completely underserved market in Saudi. So we see now trends also in Africa. So we're looking to Africa, Japan, Korea, and Russia as well. These are the markets that we're looking at from an international perspective. China and Saudi were obvious choices for us over the past couple of years, but we're looking to expand into other territories as well.
Okay, that's very interesting. We'll get back to a little bit more about the Russia and what's happening in Saudi. But I want to ask you, Aaron, how has your growth been? Because you're pretty much of a young company, a few years, and you've been doing very well in a very niche segment.
Yeah, so the company was formally founded 2 years ago off the back of all of the new supply coming into the market in more of the affordable sector, so a little bit different to the other companies. And obviously the new supply coming into the market excites us a lot, because that is the exact space that we operate in. So all of these new communities on the fringes of the city that are growing, that's the exact space that we operate in. And it's a segment that hasn't existed in the market previously. So it's a very exciting time for us, and with the new supply continuing to come, it should continue to grow. So it's been very good for us.
That's very good. I've definitely been watching that space. So Richard, you guys are one of the pioneers here. You've been here for how long?
34 years now.
Wow, okay.
We set up in 1986, so next year will be our 34th year.
And you've been with Better Homes since?
Just over 2 years.
And how has this year been?
Good. You know, we like everybody around the table, everyone's looking for opportunities to grow, everyone's looking for opportunities to diversify revenue streams. I think in terms of the market this year, we've sort of seen a tentative return of some positive sentiments in the market. I think everyone would agree with that. We started to see that in January, February, March in buyer activity. So the phone was ringing more, people were more interested, people were dipping their toe. I don't think that actually translated into transactions for that first quarter or the first sort of half of the year, but we are starting to see that really transfer into transactions throughout the summer and as we go into the back end of this year. So, you know, prices, it's still a price-sensitive market. There are still some challenges in the market without a shadow of a doubt, but I think from a market point of view, this year there's some positivity. As Better Homes, you know, we are sort of one of the stalwarts of the market over here in Dubai. What we are really focusing on is both Better Homes as the brand itself, and we've really put some fresh energy into the Better Homes brand over the last couple of years, but we're also looking at how can we diversify within the Dubai and UAE market by looking at a slightly different approach, a slightly more multi-branded approach. So we've actually launched 2 new brands this year. We will be launching a couple more in the early part of next year, and we will potentially be looking, like Abdullah, at a couple of international markets as well. So yeah, exciting times, I think, for all of us.
And the majority of buyers, we had this discussion last week. What are they? The end users, investors that you're seeing today?
I think the last data I saw from you was it was sort of about a 57 to 43 split, or roughly 60-40 split from off-plan to secondary market. The off-plan market will be predominantly driven by investors, or not entirely, and the secondary market will have its fair share of investors. We were looking at some numbers through Q3, and particularly we saw a real uplift in terms of sales in studios, 1 beds and 2 beds around the marina, around downtown, in the secondary market. And that was really being driven on our data by investors. So I do think this year, whilst there has been a return for end users, we've definitely seen some people go from renting into buying because they're seeing real value in today's market and all the rest of it. But I think it's investors that have, for us, have been leading a bit of the charge this year, because it's the investors that are often the first ones to wake up to the value that's on the table today. So.
And do you think that the investors are now coming into the market gearing up for 2020, or do you just think that the prices are right?
In terms of Expo and things? Yeah, I'm sure that's at the back of people's minds. You know, if you can get something now, can you ride a bit of a wave on rental next year? I think undoubtedly, but I think it's the value that people see in front of them today. I can't remember who said on the radio, one of the ladies on the radio the other day was talking about that fear of missing out effect. She'd been in Dubai for 15 years and she's 2 opportunities where she felt I should have taken the plunge. Well, is this that other period of fear of missing out? If people don't take the plunge over this year, perhaps early into next year, with transactions starting now to return into the market, could we see prices start to recover into next year? I mean, I think prices recovering will be more of a function of the supply, the new supply coming to market being soaked up. You know, once that's soaked up, we'll certainly see prices come back. But transactions, and what we are seeing in the secondary market, we're starting to see that drop in price in the secondary market really slow, because there isn't that much stock available in the secondary market. Good, you know, I'm sure you guys agree, well-priced and attractive properties.
So Abdullah, I'm going to ask you, what kind of patterns are you seeing from your international investors, for example, from Saudi or China?
Yeah, well, in China, I would say it's predominantly, or actually fully, investors that are looking to invest in Dubai. Their primary objective is to diversify their holdings and their investments. They like the fact that the UAE currency, the dirham, is pegged to the dollar. That gives them dollar exposure. We're always aware and opportunistic in approach. So when we see trends that are happening, we try to take advantage. And you know, there's unrest in Hong Kong today, so we've been very active in Hong Kong recently. The trade war between the US and China is making more Chinese people want to look at new opportunities. So they like the fact that it's that properties here are dirham denominated, which is pegged to the dollar. They like the fact that they can gain better or higher returns. So we like even now we look at, for example, markets like the UK with the pound strengthening over the past couple of weeks. We started to see more activity from the UK. I think Richard would probably agree with that. And yeah, I mean, also recently we've set up a subsidiary that does citizenship services, and we call it Global Mobility, which is ROC Citizenship. And funnily enough, we got a lot of demand from Argentina. So we went to a seminar and we see a lot of Argentinians looking to get a new passport or a new residency in other parts of the world. So yeah, with international markets, we're always opportunistic. When we see trends, we take advantage of these trends and offer the services that where we can and where we can, you know, add value to consumers. And that's what we're about.
So your Chinese investors, what kind of investments are they looking at in here? Are they looking at secondary market, off plan?
So our Chinese sales are about 93% off plan, and predominantly in the sub 1 million range. So our median is actually 1 million in terms of the value of the property they look at. and over 70% of what we sold is in the Business Bay Area. So we partner with private developers and in some cases government developers. We've worked with Emaar with one project called Creek Edge in the Chinese market prior to its launch. And we worked with several private developers where we underwritten their buildings just for sales in the Chinese market. So this is what they look at. The 1 million range gives them residency, which helps in the pitch. Some developers offer them some kind of guaranteed returns, and they look for homes where they can actually come and have fun, enjoy. So they do holiday homes as well. And when you offer all of these services, you kind of have that one-stop shop solution for them. They feel a lot more comfortable, and I think that's where a lot of the success came from, rather than just buying a property from a developer and then at the point of sale the relationship is done. Actually, for us, this is where it starts. When the sale happens, after that we help them with the snagging, with the maintenance, with receiving the property, ensuring that everything goes according to plan from a legal perspective, and then managing the property afterwards up to the point of reselling the property and making them their return over time. So yeah, I guess that's primarily what they've been looking at recently.
And have you seen an uptick from your investors as far as transactions is concerned?
Yes. So this year has been our biggest year for China. We've grown over 100% actually in terms of transaction volume. We've done almost over 700 million in transactions for Chinese buyers alone. So it has been quite. Last year it's been about 350. So we have seen growth. I think predominantly it's the trade war has a big effect in that. Our presence there helped a lot. So we opened our Shenzhen office early this year, and that helped kind of bridge the gap and bring in more and more partners to our network of distribution channels, and that quite helped a lot.
Wow, very impressive. Very impressive. So Daniel, I'm going to ask you. I know it's been a short time at Berkshire Hathaway, but are you seeing U.S. investors come into the market?
We're seeing that the Dubai is doing this global investment promotional program for 2020, and their primary target is the U.S. market. Looking at the reports from last year and this year, first half, you can see that there is growth in the foreign investment that came from the US or from other countries. But for us, the US is the perfect market. We are a US brand. We have a network that allows us, that has already the foundation. So just, of course, establishing contact with them, educating them, creating awareness within what Dubai has to offer, and I think the government is doing a great job with that in terms of the Expo 2020 and in terms of promoting the advantages of Dubai compared to the rest of the world. So yes, it makes our job slightly easier, but we do have the foundation, and we are in continuous talk right now with our main offices in New York, in Georgia, in Boston, Texas, Florida, California. So, and with the aim of bringing investments or investors from the U.S. market. That is our primary goal here. Funnily enough, Abdullah mentioned Argentina. Latin America is one of the very good markets to target because of what's happening in the US right now, because of the EB5 being increased to $900,000 from $500,000. So the entry level to the US markets has become a little bit challenging for them, and they are looking at alternatives. And I think Dubai is the perfect example, being a global city that has welcomed so far more than 210 nationalities, and it's the perfect spot for expats. It's very adaptable, it's very open-minded, and it's growing continuously. So that is another market that we are working closely with, as well as targeting the US immigrants in the US, the people from India, Pakistan, Russia, China, Arabs, and Iranians. There are a lot of them who are in the US, and Dubai is the perfect place for them to have their holiday homes or to have their second home. It's close to their home country. It's like a transition place for them, but then they come back and enjoy the lifestyle of Dubai and what Dubai has to offer. In terms of business and investments, I think it's the perfect spot because of the return on investment that we get in Dubai compared to the other global cities like Hong Kong, London, New York, even the main cities in Europe. So it's more attractive here to have over 6.5%, 7%. I'm just being conservative because you can even achieve more given the asset class that you're entering. Europeans are also, we're seeing, we have, our network now is expanding month on month in Europe, in the main gateway cities. We have London, we have Milan, Germany, Frankfurt, Berlin in Germany. We have Portugal, 5 offices in Portugal, 2 offices in Spain. And I think in the pipeline there is Netherlands, in terms of Amsterdam and Dublin and other main cities. So we're seeing also Europeans are looking at Dubai in terms of investments, whether it is a small property that they can now just come and visit or rent it on holiday home basis, or even in long term. And then you have the off-plan buyers who buy a bigger unit for the future use. Various markets, various interests, but yes, we're seeing that the US is, I mean, so far the foreign investment from the US into the Dubai, and I'm not talking only real estate, I'm talking different sectors, is almost at just over 16 billion dirhams for the first half in 2019. And the overall global investment, the foreign investment in the UAE from around the world is growing now. From last year it was at 13.8 billion dirhams. We're already first half at 44.5 billion dirhams. So we are seeing Dubai attracting a huge amount of foreign investment, and I think the government is doing massive work in achieving that as well. And I think real estate will benefit from all of that, although it's in other sectors, but I think real estate will indirectly benefit from all of the work that's been happening.
Yeah, absolutely. I mean, the government initiatives have been executed very well. Brokerages like yours expanding into the international market is also helping with that. And I agree with you, what you said about the US. The 2 key words is education and awareness.
Absolutely. I mean, we're not expecting to go tomorrow and come back with, big sales, but we are interested in educating them and telling them all the good things about Dubai and breaking the stereotypes and the taboos that we hear about the Middle East and this region. I mean, when some of them come here, they're shocked, what they see around them. They're like, okay, is this really in the Middle East? But yes, it is, and it's very inspiring and very motivating for us to, it makes me proud to go and say, UAE is this and this, because it's all reality that I'm talking about. And seeing it being built in front of my eyes for the past 15 years is even more motivating. And yes, we have Burj Khalifa, yes, we have the Palm, we have some great landmarks, but I think what's coming in the future is even bigger than what we have right now.
I agree 100% with you. So Erin, I'm going to ask you, in your segment, who are your clients? Are they end users? Are they investors?
So our segment's interesting because the yields available in the communities that we offer in still offer some of the highest yields, as per the last Trends magazine actually, some of the highest yields in the entire city. And the price point that we're at, you typically think for high yield, you're thinking studios, 1 bedrooms, but in actually the segment that we're into, the small villa townhouse communities, you're still getting 8, 9, 10% in some cases, and it's at a slightly higher investment point. So you'd need to get 3 studios for the same price of one of ours. So in terms of the asset management, it's a lot easier to buy 1 than it is to buy 3. So although it is primarily run by end users, it's still a lot of investor interest. So in the segment that we're operating in right now, I would probably say it is probably 70% end users. And it is typically because at the price point that we're at, a 3-bedroom plus maid townhouse, you would not be able to buy a house for this sort of price point, so let's say sub 1.5 million. 2 years ago, It did not exist. So if you're renting a property and you've got a family, you wanted to buy a house, you wanted to get on the ladder, you couldn't buy anything for less than 2 million dirhams. And if it was under 2 million dirhams, you're looking at a very small 2-bedroom townhouse in the Springs or Arabian Ranches or something like this. And it's just not big enough for your family, so you have to continue to rent. You can't physically afford to buy. But now, with the exciting introduction of the affordable sector, so many more families can now buy a house, and you can put roots down in Dubai. So it's a very exciting marketplace for us, and there's a lot of new communities coming in this space over this year and over the next year to come. But I think what we are starting to see now, which we've not seen before, is a lot of these communities are very similar. So we're sort of seeing, everyone mentions oversupply, but there's an oversupply in the micro market itself of the same product. So we're seeing quite a few of the same townhouses and the same apartment blocks coming up over and over again. I think what we will see over the years to come is that the developers are going to have to start changing the ways they go about this. They're going to have to add a little bit more value in the micro communities themselves, because there is around 3,500 of these exact same townhouses in the exact same price point in the exact same area coming into the market in the next 6 months. There isn't enough demand within that exact section to do it. So what I think we're going to see is the developers are going to start adding a few different things. Communities such as Nashama Town Square, they're adding amazing amenities within the community, parades and wave things. So it's I think we'll see a lot of developers doing stuff like that to make the individual community stand out. And I think it's good. It's competition between the developers. It's only adding value to the end users and to the market as a whole. So I think in terms of the supply-demand issue, I think the developers themselves have got a role to play in adding value to the end users.
I agree 100% with you.
If I could, I mean, I think Aaron's absolutely right. There's a lot of similar supply, and what we've also got in the market at the moment, we've got a fairly flat pricing structure. When you actually look at price per square foot across Dubai, if you look at how we are compared to other mature markets, it's incredibly flat. So there isn't a huge differentiator in terms of price per square foot. I don't always believe in price per square foot as the sort of be all and end all, but what I do think you will find as the market does recover over the next few years, you're going to start seeing certain areas really pull away from others, and you're going to start seeing areas that are a little bit more cookie cutter, for want of a better phrase. They will still offer great places to live, they'll still offer great opportunities for people to get on the ladder, but they perhaps won't see such capital growth as other places might do. And I think some of the older more established communities that have that little bit more, they're a little bit more different, they've got more, I think properties in those sort of areas could recover well over the coming years.
Yeah, I agree. So are you seeing transactions increase in H2?
Definitely. So I personally think the huge increase in transactions that we've seen over the last the Q3 was due to the amount of handovers that came into the market. I think there is a lot of, obviously the people need to buy it to create the transaction, but I think that the vast amount of handovers have come in all different sections of the city, that I think that when all of the agencies are promoting all of these different communities coming to handover, I think that has increased the actual transactions at that price point. So for us, I think there's so much competition, so many in these different communities. All of the end users that were looking in the market and waiting for some of these communities to hand over, now they have handed over. That's why I think the increase in transactions has come from in Q3, from us anyway.
And is any of you seeing an increase of transactions for people looking for short-term rentals, holiday homes, to purchase properties for that purpose?
It did in the first quarter and the second quarter, but I think with the recent announcement that were made by some major developers, it has created a little bit of worry for insecurity for some for the individual investors. You know, because when you buy a unit or two within a residential building, there could be a risk of not being able to do, and there are some developers right now who are imposing that you cannot put your unit in short term. Although DTCM is saying, okay, if you obtain a license to do so, you are able to, but they're still being challenged, and I think it has created a little bit setback on the individual units side. But on the full asset side, I think there is a huge appetite for that, especially in areas like Palm, Marina, JBR, and where the tourist dollar is. There is interest still, but in individual units, we're seeing a little bit of hesitance.
I think there's a lot of people also done the reality to start crunching some numbers on this. We are a very seasonal market when it comes to short-term rentals. We've seen a considerable drop in the price of hotel rooms over the last couple of years. And do the short-term rental numbers actually stack up properly against long-term rentals? So we've seen a lot of our people that have historically wanted to dip their toe into short-term rentals have actually said, I'm going to rent this out on a long-term basis. Where there's a real market for short-term rentals, in my view, is for people who want the flexibility of a short-term rental. And there's lots and lots of those investors out there. People from China, America, the UK, who want a bolt hold here, they want to come over, use it 3 or 4 times a year, and then the rest of the year, they want to make some money out of it. And that is perfect for short-term.
And I think to add to that, we've also seen a lot of people use the short-term model to sell their property. So if they want the liquidity of their apartment to remain intact.
Yeah, you create a positive cash flow.
Exactly. So you still have cash flow. You don't have a sticky tenant where end users won't buy from you. So they make income, and for them they can use it. They can stage their apartment so it actually looks nice when you view it, when you offer it, and the liquidity of the apartment remains or the villa remains intact. So a lot of sellers today they choose to go through that model rather than renting it for 1 year or 2 years, because you never know if the tenant wants to renew or you get into a situation there. So they go for the short-term model to maintain the flexibility and the liquidity of the apartment. And that's been increasingly more apparent recently.
So leading up into Expo 2020, I mean, obviously just in this conversation today, I'm seeing a lot of different dynamics in the market that we haven't seen before. What kind of questions are you guys getting from your clients, businesses wanting to come in? Are you seeing different trends just due to Expo 2020? I'll start with you, Richard.
So we both work on the commercial and the residential side. On the residential side, yeah, absolutely, you will speak to tenants who are working on Expo. On the commercial side, we've started to do quite a lot of business around the Expo site in Dubai South. We've got some interesting requirements coming through for Q1 for bigger requirements for people shifting larger numbers of staff accommodation, that sort of thing. So I think that's going to build up. My personal view on Expo is I sort of liken it to my time when I was in London during the Olympics. I was in the Olympics for 2012. And before the Olympics actually started, there was a little bit of, is this a white elephant? What's actually going to happen? Is this really going to actually bring everything we wanted? And perhaps in the true British style, we all started to think this is not going to be as good as it was. And about 2 or 3 months before, the noise started happening. It's everywhere you looked, and it started to get quite exciting. And by the time the Olympics, I've got goosebumps. By the time the Olympics went, I remember watching the Olympic Games opening ceremony, and it was fantastic. It was just incredible. And that was the best city in the world for 2 months, undoubtedly. Okay. It was such a good atmosphere. Everyone had a smile on their face. And that had such an important knock-on effect into the psyche of London, into the economy of London for that period. And I think Dubai will do this properly. I think Dubai will make this an incredible place to be for 6 months. And I think that alone will have a very, very positive impact into the psyche of Dubai, to the population of Dubai, the economy of Dubai, which will then, it's going to help us support in real estate. Beyond that, no one's got a crystal ball. We hope that there's some positive effects on population afterwards, but I think it's going to be a great, great place to be for 6 months.
So do you guys think that prices are going to stabilize before Expo 2020 leading up to it, or do you think we're going to see a little uptick just due to sentiment?
If I take this question, due to the supply that's coming in towards the end of, we're already towards the end of this year, and we're expecting a huge supply to come in terms of community handovers. It is going to put little stress on the pricing, given the amount of properties that are going to be offered for sale. But I believe there is a positive sentiment in terms of leading up to the Expo 2020, knowing how Dubai does things. Right. It's going to be an incredible show. It's going to be great. It's 6 months long. We all around, if we go around the table here and ask, when did you come to Dubai and how long you had in mind to stay in Dubai? We're all going to say, I had 2 years, 3 years, and we're all here, I'm here now 15 years and I had only 4 years to stay in, and I was planning to stay 4 years. And I'm sure same thing for Abdullah and same thing for you. Richard, I think you're going to be here for a while. You're going to be here for a while, and same for Ernie. So people are gonna come and they're gonna like what they see. They're gonna see this beautiful, inspiring city, and they would want either to come back or stay. Our job here and the government job is to create this sustainable environment for those people who are going to come, because we need to create jobs, we need to create a socio-economic system for these guys to move in and make this home as well, just like we all did. Going back to your question, will the prices remain under pressure? Yes, due to the supply, but I think the best communities, the ones that are well equipped and they have all the facilities and amenities and it's all wholly rounded community, will hold its price. Just the Expo 2020 site alone is around 260,000 square meter of brand new developments, from cultural, educational, residential, entertainment, business. So you're gonna see, and the infrastructure is amazing there because the government has really invested a lot of money to make this happen. So you are going to see communities that are well established will perhaps hold a price, but the ones that are not fully finished will be under pressure moving forward.
So how do you see areas, for example, Aaron, that you focus on, like the Dubai land areas being affected? Or do you think that there will be no effect for them for Expo 2020?
So to go back slightly towards the companies coming over, in the areas that we do, which are on the fringes of the city, which are a little bit closer to these sites going on, there's the solar park as well as the Expo site. We've had quite a few corporate clients coming in, and we've done floors for tenants, multiple floors. We've got a lot of inquiries over the next 2 months for hundreds and hundreds of tenants coming over for the Expo site and for the solar park. And that's only going to increase as it gets closer to the actual time. But in terms of demand, I think throughout this entire year, all of the government initiatives have been demand-side factors. So the visa requirements, the mortgage caps, the online trade licenses encouraging companies to come in. These are all big demand-side factors. Obviously, the Expo itself is the biggest demand-side play you could possibly inject into an economy. That coupled with the Real Estate Committee, which is the first supply-side play that we've seen, I think we could sort of see a slight equilibrium in next year into the market. In terms of the areas that we do on the periphery, Expo is going to be great for it because it is in and around the region, and DWC, it's close to there too. There are quite a lot of these communities coming over the next year, but for me, all I've seen is the migration out of the core areas, so the Dubai Marina, the downtown, the Palm. You can get, for a price of a one-bedroom apartment, you can get a villa in the communities that I operate in. So as fast as these communities hand over, we fill them up. So from my side, there is no lack of demand whatsoever. If anything, I think that the decrease in price in the more core areas is due to the new communities coming into the market. And these communities are seen as, lesser communities on the periphery of the city. But if you go to these communities, they're beautiful. The amenities are absolutely fantastic. They're providing a lot of competition to the main areas. Would you rather live in a one-bedroom apartment in Dubai Marina? Would you rather live in a three-bedroom, 2,500 square foot townhouse with dog parks and swimming pools? These are beautiful communities. So in terms of demand, as we get closer to the Expo and people are actually going to start going to the Expo site, I think it will only increase in these communities.
So very good market sentiment, obviously. So Abdullah, with your Saudi investors, obviously there's a lot of investment in projects happening in Saudi. Have you seen them steer away from Dubai and invest more in Saudi? Are you seeing them come into Dubai for Expo 2020? What's the trend that you're seeing?
Look, the short answer is no. There's still Saudis still represent a large portion of our business. They still continue to buy, and they continue to buy in strategic ways. Some of our anchor clients are still buying buildings or developing communities as well. With Expo, I think there's the Shanghai story of Expo, which was amazing because after Expo in 2010 in Shanghai, prices tripled in Shanghai over a 6-year period of time. And especially in that area of Pudong, which is where the new Shanghai is. You look at Milan in 2015, it's a bit of a contrast, and what it boils down to actually is the economy. What's the economy doing? Where is the demand coming from? And if you look at Dubai, even from the beginning of time, historically, prices of real estate move upwards when the economy is good, and they move downwards. The real estate cycle is very similar to the economy cycle. If we look at the latest IMF reports, we expect the economy to grow in 2020 and beyond, and that's due to a number of factors, including increase in trade and tourism and transport and logistics. In fact, in logistics in particular, and I don't think we've seen reports on that, but we're operating in Jafza and we're very active in the warehouses front and industrial real estate. And I think that's an area where we've seen demand growth and price growth as well in the last maybe 12 months. And we've seen a big growth in demand and price increases. And that's primarily due to shift maybe from retail to e-commerce. And a lot of these guys are needing more and more space to store their products, whether it's Noon or Souk or Amazon or what have you. So this segment has actually seen price growth for the right reasons from an economy perspective. So you see a shift towards e-commerce, and that trickled down to the actual economy and to the real estate prices. And you'll see the same story within real estate, residential demand and commercial as well as we near Expo and as population increases. And I think that's really what it's about. For Saudi, again, in particular, I don't think we will see change in their sentiment towards Dubai. Dubai has always been a hub for regional investment and for regional trade. A lot of Saudi entities still have their representative offices here to trade with China, for example. It's much easier because of the logistics that the city has built in the infrastructure. It's much easier for traders to trade through Dubai into Saudi. And I don't. Yes, there is going to be growth in the Saudi market with all these changes. But at the same time, you'll see this city growing as well and becoming more and more interesting from an investment perspective. And you'll still continue to seeing Saudis continue to invest in Dubai.
I refer back to the infrastructure and the connectivity and the initiatives that the government or the private entities are taking in terms of technology and advancement. And I always look at Dubai as a futuristic city. So we're always building for the future. We're always adapting with what the future needs. We've seen artificial intelligence. We're seeing autonomous cars coming in. We're seeing 3D building coming in by 2025. I think 25% of each building has to be done through 3D building. That's the vision for 2025. We are seeing the connectivity that Emirates has created for Dubai and for the region in general has made Dubai the spot to be in terms of Middle East, and in fact it is in the middle for everywhere. If you're coming from London and going to Australia, you're bound to stop by Dubai. If you're coming from the US going to Japan, you're bound to stop by Dubai. So Dubai has become the global hub for everyone. And I think when you come and see what's there, then you start exploring. And with the efforts that are around, everyone now is seeing the advantages and the attractiveness that Dubai offers. And like Abdullah said, it's just with the economy it goes. And we're not only talking about local economy, but global economy. We're seeing, the China-US trade war. We're having distress in Hong Kong. A lot of restrictions on money movement from some countries. They're now stopping the funds to go out of their country. So, and that obviously sort of affect our economy here in Dubai. But I think it is a futuristic city, and it's going to have more and more coming in as investment and as interest from outside. Whether it is Saudi will take some time I really love what they have come up with and the changes and development, and it's amazing to see that. But I think it's got also a long way to go before it could be competitive place for Dubai. Dubai is still way ahead than the rest.
I agree. Do you think that there's any more government initiatives that can help our growth?
Yes.
Okay.
Yes, 100%.
I think the government have been busy this last 18 months, announcing a lot of things and then taking a bit of time to actually bring them to the forefront. Visa reform has been very welcomed. One of the big things for me is making business in Dubai as easy and as cheap as possible. And I think there's been some good steps taken in that regard, but there's still a lot of steps to go. We need to be encouraging as many businesses to come here and set themselves up here.
And for the local businesses to grow as well.
Absolutely. The government needs to continue on that path. It's taken some good steps, but it needs to continue on that path. Myself and Aaron probably work more in the domestic market here than we do in the into the off-plan market. Although we both do a bit of off-plan, it's more sort of that market. That market for me, the big thing, and we've spoken about this. I mean, you've spoken about this. I think you probably know where I'm going to go with this. Is the mortgage, the mortgage cap, the loan-to-value necessity of a 25%. That for me is the big thing that is stopping a lot of pent-up demand to actually put down roots. Yes. And for me, that is about stability. It's about having a stable market and a stable population who have put down roots here. If you encourage people to buy a property, if you encourage people to set up home, grow a family, put down roots, it becomes home, and it becomes therefore self-fulfilling. It becomes more stable. Right. If the property market is fed by 80-90% investors by their very nature are quick to liquidate, and they're quick to move on to the next opportunity.
And they don't live in the country, so they don't use the whole
And that creates instability. So if I could speak to the government, the thing I would definitely want them to do is look at the.
I think there is some credit growth with banks that we started seeing. But imagine they did that in 2014, and we're looking at where we are today, you'll see a lot of people in negative equity and banks defaulting as well.
On that exact point though, there are some people that are in and around the close to negative equity, and they've not seen default rates increase.
And that's at 25%. So imagine they relax it to 15 or 10.
Markets in the world go up and down. Yeah. So people go into a negotiation and then they come out of it. They hold their properties in those periods. There's nowhere in the world where there's a market cap of 25% on mortgages. Nowhere in the world. And what I would encourage is there are other ways to ensure that people are buying maturely, they're buying responsibly. And what we need to do here is we do need a more robust view of people's ability to pay and their ability to pay back.
I think going back to the data now, you have, before we didn't have this, but now we have the ability to see who lives here, what is their spending, what is their credit history. They've been renting. Before we didn't have Ijari, now we have Ijari. You know how many people have been renting perhaps houses for over 200,000 or 180, 175,000. So they have the ability to pay their mortgage if they were given what Richard here mentioned. The LTV was more according to their financial ability, because 25%, that's not 25% plus the fees, plus the mortgage fees, plus transfer fee, plus it amounts to 32% that someone has to have in savings. Knowing the lifestyle in Dubai, we tend to spend more than we save. So I think giving the opportunity to those people and looking at, not as a general view, but looking at people who've been here for 5, 10, 12 years and are able to afford that mortgage to not end up defaulting, of course. But we have the data now to determine who are those people, and we can maybe cater to those people and turn them from tenants to homeowners. Because everybody is waiting for the bonus and to be able to afford that. But right now the economy is under a little bit of stress, so the bonuses and the big paychecks are not happening, but steady income is there. Perhaps we could, turn that towards more of a mortgage paying than paying a rental property.
Yeah, the long-term reality of it, the long-term reality of Dubai and the success of Dubai in the long term is all about population. It's about making sure we have the population here to get to the numbers that we need to make really Dubai sort of post-carbon even stand up and be a really viable, amazing city that it is today. And to do that, encouraging people to have roots, buy a property, live in a property, creates that stickiness that I think,
What's actually interesting on that point that you just touched on there is, it's actually, we also have a mortgage consulting company as well, and what's interesting is it's actually easier in many cases for a non-resident, the documents that are required are less, and the bank statements are required are less for a non-resident to get a mortgage in Dubai than it is for a resident to get a mortgage in Dubai. And that is.
But I think that is because they only get 50% and then they have a property in, as a collateral, so the risk is minimum. But when you give 75% or 80, or perhaps if we go back to the days of 90, that'll be great. But yeah, there is a risk there for the banks. However, I'm not saying open it for all. I'm just saying look at who can afford it. You have the data, you have Ijari system, you have everything. You can, I mean, UAE Central Bank know who, who can and cannot, and open it up, because it'll give us a huge boost in terms of power of buying compared to what we have in right now.
For sure, I think the other difference between Dubai and other markets is Dubai is predominantly expats, so it's easier for an expat to default and just leave the country than for someone who this is their actual home, that's where they're from, and so I think it's very controversial from a central bank perspective, from a government perspective. While it's an easy decision to make and in theory, but I think in practice it could be very, very costly, and I think they're wary of these risks. It would be great for the market, it would be great for us, we'll sell more properties, but will it cause a run on the banks if things deteriorate further? And will it cause banking distress, which will be even more hurting and negatively impact the entire economy? But yeah, I mean there's a very thin line. Yeah, exactly.
It is. But I think, as Dunya alluded to, and I fully understand that banks want to mitigate their risk, and they absolutely should, especially after what happened in 2008. But I mean, I think that if, for example, we know the history, we have the data. If you have a first-time home buyer, you can offer them, for example, 85% LTV. They've been here for 5+ years. There's less risk. There are less riskier options. So I think that if we can be creative with this, that there's solutions. Yeah, absolutely. Yeah.
I think that, coupled with obviously the segment that I'm in, the more affordable housing, if you couple that, there's going to be a lot of, it would explode, I think, in the section
completely.
It would, if a lot of people that are renting, spending even 60, 70, 80,000 dirhams a year on rent, you put that into a mortgage, obviously the down payment's less, the demand would absolutely explode in my segment. It would be very good for it. Very good.
To change it for you.
Exactly.
Okay, so before closing our first panel edition of Property Finder Talks, what is the last thing that each of you would like to say about the market going into 2020 and the future after? So I will start with you, Dunya.
I'm very happy to see that the Developers Committee, the Real Estate Committee that has been set up by His Highness Sheikh Maktoum, it's a good step forward, because a lot of the bad sentiment was more about the launches that were happening, and now having a committee to decide and to do more thinking before launching a development or launching a project is very vital for Dubai now. We are gone beyond the time where, okay, let's build a residential building and let's build next to it another 15 residential buildings. It's more about what the city needs. Where are we lacking? What do we need? More communities? Do we need more high-rise? Do we need parks? Do we need schools? So there should be a proper study into what's needed, so there will be demand for it, instead of just duplicating and putting out there in the market things that already exist, and there is no point. So I think zoning and community studying the needs of the city is very important. I think with this new committee, I know it's newly set up, so they'll definitely catch up and implement the right rules and regulations for developers to put in their projects ahead, and they need to be looked at before they are announced.
Agreed.
Yeah. Absolutely, yes. To keep, to make things sustainable. All we want sustainable. We love this place. It's home, but we want it to be sustainable for everyone, and we want to welcome more and more people, because going back, we need people here to flourish, all of us together.
Abdullah?
Yeah, I mean, the stimulus that the government has done, whether it's in the Abu Dhabi front or Dubai or the entire UAE, has been great over the past couple of years. The government initiatives that they've done, including launching the committee now, And I think that will trickle down to the economy, especially now leading to Expo. The reality of things today is that the real estate prices have come to a level where they're very close to replacement value. So if you look from a private developer's perspective, between buying the land and the construction costs and all the sales and marketing fees, it's just not feasible to develop. And you won't actually make money because you can buy a ready property today that's cheaper. And that's why you see the likes of Damac, for example, stopping all of their development since early 2018. So private developers can't really get into the development wagon today. Government developers, the only reason they continued to develop in the past is that the land is free and they're just unlocking the land value into physical assets that they're going to sell. Instead of selling a land worth 1.2 billion, let's break it down to units worth $1 million or $2 million each and sell that land over time. So that's naturally going to happen, I think. Now with this committee, that's the only thing that was needed actually is in balancing supply and demand. Because if the government stops developing, stops using their land to parcel it into units to sell it to the open market, naturally supply will stop and demand continues to grow as population grows. So I'm personally very optimistic about the market, and I think there are good signs to be optimistic between the forecast on the economy, the Expo coming up, and prices being at these levels where private developers cannot develop in today's market. I think these factors alone make me optimistic about the future of the real estate market in Dubai.
I'm incredibly optimistic about 2020, incredibly optimistic. There's an estimated 25 million visitors coming to Dubai for various reasons and for various sectors, but for all of us stakeholders in the market, how can we leverage that? How can we add value to these 25 million people that are coming in? How can we market ourselves? How can we market our products, our services, the city? I think for everybody who's in Dubai for the next 12 months, I think it's going to be a very exciting place. It's just about who we align ourselves with, how we promote our services. I think the opportunity is there. It's just how we go about doing it. But I'm incredibly optimistic about the next 12 months. Definitely so.
Very good. Richard?
I'm cautiously optimistic. Look, I think we need to be a little bit careful that we don't start thinking we're out of the clouds and into green pastures, because there are still genuine challenges here that need to be addressed, and I think the government are continuing to take steps forward in doing that, and the market is taking steps forward, and I applaud that. I suspect, although I don't have a crystal ball, we are nearing the bottom of the pricing cycle. And I would hope that everything that's coming into next year, we will really, and I genuinely believe we're going to start seeing the continuation of transactions increasing into next year. I think next year could be a really good year for transactional numbers. Will that come in, have a play into prices next year? Well, as Dua said, I think realistically, when there's still a lot of new supply coming onto the market, that elasticity of supply is going to make price recovery quite challenging. Certainly in some of those newer communities, I think we'll start to see prices recover in some of the more traditional older communities where you have a bit of differential. You can actually differentiate the property to others, and there isn't as much supply. That's what I suspect. What do I kind of think mid to long term? Well, like these guys, I'm a believer in Dubai. I think this is a unique city. I don't think there's anywhere in the world like this place in terms of what's on offer in terms of culture, what's on offer in terms of the ability to raise a family, the safety, the lifestyle, the tax situation over here. And I think what is Expo? Expo is a fantastic PR event. Yeah. Expo will put Dubai in the shop window for 6 months. We'll have a great time, and I'm genuinely really excited for it. And I think that can only be really, really positive. So I think next year we'll have a good year. I think it will continue to have some challenges, as large parts of the world will have some challenges. But we will keep growing. Dubai will keep growing, and the mid to long term future for Dubai, I think, is very, very bright.
It is.
Agree. Well, thank you all for being part of the first panel of Property Finder Talks and sharing your insights and knowledge and expertise. Really, really appreciate it. I mean, obviously, there's a lot of information that we got today, just as far as your businesses are concerned, but as well as where the market is going. And I agree with all of you. I also am positively optimistic about what's to come next year and going forward. We do have our challenges, but this is Dubai and it is an amazing city, which is why we're all here. So
Absolutely. Yeah.
thank you very much.
Excellent. Thank you.